Taxation Part 3, Federal Tax Receipts, a macro video lesson with Steve Reff and Eric Allmeroth. Federal tax receipts. Although the line rises and falls, it typically remains within range of 17 to 20% of GDP, except for 2009, when taxes fell substantially below this level due to a recession.
Did you know many Americans falsely believe that federal spending has grown overwhelmingly? Many also think taxes have increased excessively. The top line of the graph indicates total revenue taxes as a share of GDP since 1950.
The graph also denotes the patterns of taxation for the main categories of taxes levied by the federal government: personal income taxes, payroll taxes, corporate income taxes, and excise taxes.
Yeah, when you look at these, Eric, these are the main taxes anybody who's studying economics should understand. Income taxes and your Social Security taxes are usually taken out of your paycheck, or you'll have to pay it once you receive your 1099 form. Corporate taxes, obviously paid by corporations, where they usually take some of that tax, if not all of that tax, and pass it on to the consumers. And then excise taxes, tax on tobacco, tax on liquor, tax on other items that the government thinks they can make some money off of. I think these are the important taxes, if kids can remember these. I like what you did up at the top of this graph, and maybe you can explain about total federal tax receipts.
Well, all of these individual lower curves added up would be total federal tax receipts. And so proportionally, we can see our individual income tax is generally less than half of what our total receipts are.
When most people think of taxes levied by the federal government, the first tax which comes to mind is the individual income tax, due every year on April 15th or the following business day.
The personal income tax is the largest single source of federal government revenue, but it still represents only about half of federal tax revenue.
Corporate income taxes and social insurance taxes provide a smaller share of total revenue receipts.
Federal tax revenues have been about 17 to 20% of real GDP during most periods in recent decades. The primary sources of federal taxes are individual income taxes and the payroll taxes, which finance Social Security and Medicare.
When looking at this graph up at the top, those are the total federal tax receipts received by the government from the taxes down below, which represent the individual income taxes, social insurance taxes, which is Social Security and Medicare taxes, corporate income taxes, other taxes, and excise taxes.
The point we're making here is that individual income taxes, though there's a perception to have increased relative to real GDP over the last 50 years or 70 years, actually, even as we look at the last 30 years, the numbers are about the same. Individual income tax as a percentage of real GDP was about the same in 1986 as it was in 2019. Also, I think it's important to notice that our individual income taxes are about half of our total federal tax receipts.
I think that's a great point to make, Eric. People think individual income taxes are a large percentage of our real GDP. I think this graph tells a different story. Thanks, Eric. Great job on talking about federal tax receipts.
Thank you, Steve Reff. Taxation Part 3, Federal Tax Receipts, the end.